Welcome to the Disruptive Innovation Festival, and thank you for joining us during this session today. Unfortunately, today is the last day of the Disruptive Innovation Festival 2018, but we are very excited because we have a full day, a day full of activity. So in this session, we're going to be exploring if the current old system that is generally a bit hesitant to adapt to a new era has what it takes to create financial inclusion. My name is Laura Franco, and I am delighted to welcome Luisa Martinez, an ambassador of One Young World, representing Uruguay and the Director of Innovations and Partnerships in Quelab. Quelab is a cloud digital platform for financial services providers. We'll be taking questions throughout the session, so please put all your questions, comments, and feedback to Luisa in the comment space next to the stream on our session page. And you can also ask questions using Twitter and the hashtag ThinkDiff. And now, Luisa, so I think because this session is called The Real Disruption of Financial Services, I think it would be great to start by telling the audience what type of financial services are you referring to, and by giving us a short introduction of what you mean by a real disruption. Welcome.
Thank you, and good morning, everyone. The idea of this session is to talk about what it is really the disruption in financial services, because in my role in the company that I work for, I am the director of innovations, and many times people is 100% convinced that being disruptive or being innovative, I always use the same example, is sending a car out of space. And actually, innovations is the art of problem solving, is when you are facing some challenge, some issue, and having a very creative way of giving a solution for that. And throughout this session, we are going to talk about which is going to be for what I believe is going to be the real disruption in financial services.
Thank you, Luisa. So I think we're going to talk a lot about financial inclusion, and I think you mentioned in your description for this session that financial services could take millions of people out of poverty. So I think it would be crucial to start as well with what is financial inclusion, and what is your perspective on that topic?
Well, financial inclusion is like this phrase or this concept that has been around for a couple of years now. Some will say that is almost a trending topic in the past years, but all of this has started back in the 80s. Sorry, I have a terrible flu. I'm just saying this for the audience. And what happened in the 80s is that the financial industry, especially the banking industry, have realized that the way that they were doing business wasn't enough, and that wasn't working to really take people out of poverty. And that's when the concept of microfinance is born. And the person who created this concept was Professor Mohammed Yunus. And he created this foundation that is called the Grameen Foundation in Bangladesh, in Asia. And with this idea of microfinance, what he established back then was that by providing a microcredit or a microloan to a person, and if that microcredit or if that microloan had a goal, had an objective, that person could invest that money in some small business, and by that repay their credit and cut the circle of poverty. And back in the 80s, that was a completely disruptive concept, basically because in Bangladesh, in the areas around there, and then when that concept started to evolve in the rest of the developing economies, this concept of microfinance was really helping, especially in the developing economies. But the problem was that, as we all know, I mean, we live in a capitalist world, microfinance it became a business. So what it started as a social mission because we were giving microcredits and microloans to people that in any other way could afford to have a loan, and not in terms of just repaying it, in terms of showing up to this bank or any financial institution and just asking for a loan. They will never will get that loan because they didn't have a credit history, they didn't have formal jobs, and all the things that we know. So that was the idea or the paradigm back in the 80s, and this concept evolved throughout the 90s and in the early 2000s. But the problem was that this, like I said before, this wasn't enough. And the world changed completely, especially because we are right now in the wave of the fourth industrial revolution. And this concept wasn't enough because you are not going to take someone out of poverty by just giving them money. That is not enough. And we know that that doesn't work. So financial inclusion comes as an evolved concept of micro lending or microfinance, to actually have a comprehensive way of banking. We not only need microcredit or micro lending, we also need savings, and we need easy and cheap ways of transact. And the poor have over and over demonstrated that they are very amazing managers of their money when they have the chances, to learn how to save and how to deal with their financial things. If we give them that opportunity and if we give them financial education, they can actually start overcoming poverty. And this has been proved all around the world. And right now, like to close this concept about financial inclusion, in 2015 the UN launched the SDGs, the Sustainable Development Goals, and financial inclusion is one of the things that is transversal to the 17 SDGs. And if we go back to Prof. Mohammed Yunus, last year he launched a new book with a new theory of how we can eliminate poverty in the world. And he sustains that we need a world of 3 zeros, with 0 poverty, 0 unemployment, and 0 carbon emissions. And the only way that we are going to achieve that world is if we give financial inclusion to all.
Thank you, Luisa. And I think, well, I wanted to ask you something, but you've already touched a little bit upon it because you mentioned the SDGs, so we can already get an idea of what kind of institutions are behind this promotion of financial inclusion. But I want you to expand and elaborate a little bit more on what type of institutions are involved in creating financial inclusion.
So, like I was saying at the beginning, I think that financial inclusion is a trending topic, worldwide. And this is a trending topic because for one side, you have the banking industry, which is one of the oldest industries in our economies. And at the same time, are the ones, especially in the developing economies, that are sustaining the entire economy of a country. And this happens especially in the developing economies and in the very, very small countries. And even though they have all that power, again, we are all realizing that the way that we are doing banking is not sustainable and it's not going to create the world that we want to live in. And then at the same time, especially with the boom that we had in the 80s with microfinance, there was like hundreds of different kinds of financial institutions were born. And this is what we call like the financial soup. We have credit unions, cooperatives, microfinance institutions, SACCOs, which are savings and credit financial institutions. We have village barns, rural banks, and community banks, and anything that you can imagine. And this is the financial soup. So every time that you start to talking about, okay, which are the institutions that are working in this? And well, basically I could say that all the entire financial industry is working on this. The difference is that the banks are not working as we would expect that they work for financial institutions, because the banking industry have a completely different mission and vision of their business as all of these financial institutions that I just talked, these financial co-ops. And the financial co-ops have always had the same goal. They are there to serve the underserved or the unserved in their communities. And when you start to talk about technology and all the technology that needs to be out there to help with the operations of these financial institutions, you'll find out that you have like a lot of software industries that are saying, okay, I developed software for this kind of financial institution and for this kind of financial institution. And at the end of the day, they are all the same. And that's why we group them as the financial co-ops. So the real disruption will come from these financial co-ops, because they are already serving over half of the population of the world.
Thank you, Luisa. I am also wondering, in order to success in this mission of achieving financial inclusion for everyone that can maybe take out of poverty many people that are still trapped in there. What kind of transformations or what kind of steps do you think we need to take?
Yes. So, like I was saying at the beginning, we are in the middle of the fourth industrial revolution. And for how the world had changed over the past decades, it's impossible that it doesn't matter what kind of business you have or what kind of business model and social mission that you have. It's impossible that that will not be affected by technology. Every business will be affected by technology, and every business will need to go over a digital transformation. And when you apply that into this industry that we are talking about, to these financial co-ops, that digital transformation is in order for them to keep sustainable and actually for them to remain in existence. Technology, actually, a couple of years ago in 2016, the Carl Schwab, which is the chairman and founder of the World Economic Forum in Tianjin in China, in one of the events of the World Economic Forum, he stated that fintech, which is financial technology, was the most disruptive technology of the 21st century. And that was a very bold statement. And I am 100% convinced that that is true. And I don't say that only because I've been working in fintech for the past 4 years, and not just because of that. I truly believe that this statement is 100% accurate, because what technology is doing to one of the oldest industries in the world is so disruptive that many of these financial institutions are not even fast enough to go along with this change. And what I mean by this is something that maybe not everybody in the audience know. For a financial institution to work and to operate, they need multiple technologies. They need to be connected to credit bureaus. They need to be connected to credit cards and debit cards and different points of sales. They need to be connected to the ACH of their country, so they can do transfers and they can send wire transfers internationally, and many things more. And all these technologies are super expensive, are very sophisticated, and for the past decades, only the banks and the big financial co-ops were the ones who were able to have all this technology, and they were doing okay. But the thing is that these technologies were created in the 80s. They worked amazingly good in the 90s, and they were like kind of okay in the early 2000s. But these technologies are becoming obsolete. If you think about, for example, your phones, we are not using phones for, I mean, none of us have used the same mobile phone for the past 10 years. We change our cell phones every 2 years. We are not using the same Facebook or Twitter platform that we were using not even a couple of months ago. And with technology for the banking industry and for these financial co-ops is the same. But the problem is that these technologies are very square in terms that they are isolated softwares, they are locked, and they don't have any room to innovate. And that is a huge problem, because when you want to reach to more people and when you want to provide better and more products and services to your consumers, to your customers, that technology is completely obsolete, and you cannot provide what your customers are willing to have. And then when we talk about cost, the smaller financial co-ops are, I mean, they cannot handle this kind of software because it is too expensive, and because they don't have the kind of human resources that can assist and control this kind of software. So from one side, we are having that technology is changing super fast, and most of every software are becoming obsolete, and they are dying. And the other huge problem, or not problem, I would like to say challenge that we are having, that has a lot to do with a technological perspective, is the tsunami of regulations that we are facing, especially in the developing economies, and especially when we are talking about these financial co-ops. Because a couple of years ago, maybe 10 years ago, these financial co-ops were just maybe giving, small loans. They weren't doing savings. They weren't doing any transfers, or they didn't have a lot of different transactions to do amongst their customers. So the regulators let them be. Okay, you're not handling a lot of money, you're not making any savings, so it's okay, do as you want. We are only going to ask you just a couple of things, and that's it. But the problem was that these financial co-ops started to grow, and they started to change their business model, and they started to collect the money and making savings and giving larger loans. So the regulators came as this huge beast, attacking them and creating all these crazy regulations that are not the regulations that this kind of financial co-ops need, because they are just copy pasting the regulations for the banks into these financial co-ops. And some of these financial co-ops can sustain this wave of regulations, but the smallest ones, they just can't. And we are talking about reporting, we are talking about improving their technology, we are talking about training to their employees, and more. And that becomes a huge challenge. So all of a sudden, you have the regulator saying that these financial co-ops are a bank when they are not. And the huge challenge that we are facing now is that these technologies are these regulations are affecting in a huge negative way to the smallest financial co-ops, who are the ones who are serving the most vulnerable people.
So, Luisa, what I'm getting from your explanation is quite a negative view on how regulation is affecting these these kind of institutions and the people. But could it be do you think there is an option if we regulate, in a good way, if we have different regulations for small organizations or big organizations, or the financial co-ops that you're talking about? Do you think that we could regulate in a positive way that actually has a good impact, or do you think that we don't need regulation at all? I want to know your opinion on that.
Well, this is a very tricky point for me, because I went to law school. We all have our dark side, so I went to law school, and the problem with regulations are so many. But like I was saying, the main problem is that regulators are regulating for banks, and if you're not a bank, well, I'm sorry, you will have to deal with what I am talking. And yes, if you want to have financial inclusion, if you want to have a healthy financial industry and financial system, you need to regulate accordingly to every financial institution that you have inside your own ecosystem in your country. And you need to regulate for that specific situation, or just making general public policies. But you cannot. So what happens in the financial industry is that you have like these global institutions that are like the main advisors in terms of regulation, especially with everything that has to do with money laundering, crime, financial crimes, and everything that has to do with that we call compliance. And the problem is that you have these large institutions that are, most of them, for not saying that all of them, are in the developed economies, creating these recommendations for the largest banks in the world that have so many resources. And then what they are trying to do is that the developing economies are compliant to the same thing. And a financial co-op that have maybe 500 members will never be able to achieve all this compliance. And then the local regulators are just copy pasting that. And again, they are now regulating for the kind of ecosystem that they have. And if we really want to have financial inclusion needs to become a public policy and a matter of state in every country that we are talking about. Because if you don't force your entire financial industry to go through the same path, it's impossible. Because at the end of the day, we are talking business, and what business want is to be the least regulated that they can be, especially in the banking industry, when they have the same business model for over, 600 years now. The basic business model for a bank is buying cheap money and selling that money very expensive. The business model of a bank. And financial co-ops they don't have the same business model. Even though they do some things that are very similar to banks, they have a social mission underlying. And the way that these small financial co-ops, well, they don't need to be a small, but the only way that these financial co-ops are going to be able to face this huge wave of regulations that are coming, and this huge wave of new disruptive technologies, are if they all jump into digital financial services platforms. And this is what is coming. This is what's going to happen. We are going to stop talking about core banking systems. We are going to stop talking about, oh, I'm using this software for doing this, and I'm doing that software for doing that. We are going to start talking about digital financial services platform that are going to be compliant with regulations, that are going to be compliant not compliant, that are going to be able to provide all the products and services that the people want, and that are going to use global standard technology.
Thank you. And we actually have one question coming from Twitter, and this person
Awesome.
is asking. That's okay. Don't worry. And this person is asking, with the emerging digitalization of financial services, are developing countries closer to have the same access to financial services as the so-called developed economies? And well, you have already covered a little bit of this, but if not, what is needed to make this happen?
So again, unfortunately, so first I come from Uruguay, so I come from a developing economy, and yes, developing economies, we have a harder work in this area, and for us it's more difficult because we have a lot of challenges to face, not only in the banking industry or the financial co-op industry. And the way that we are going to survive this is if we jump into the same platform. We need to have cheap technology that is accessible. I'm sorry, I just created a new word. That is affordable and that everybody can access to that in a cheap, low cost, fast, and mobile way. We need to have that. And the only way to have that is throughout a platform like Facebook, for example, Twitter, any social media that you can think of, Google. We need to have these huge platforms that everybody can use and that everybody can get benefit out of that. And I am not saying that this is going to be only one platform. Most probably are going to be multiple platforms, but they are all going to be integrated and they are all going to talk between each other. So there are two huge disruptions coming. And yes, the one that are going to be more affected by this are the developing economies. So from one side, we have a negative perspective, which is the obsolete software and this huge wave of regulations. But the positive one, like I've been saying, is that these digital financial services platforms are coming. And the only way to solve this problem is that the financial co-ops die, just that very drastically, or they transform into the largest force of good worldwide, even bigger than the banks.
Okay, that's an interesting point, Luisa. And actually, we have another question from Twitter, very related to what you just to what you were talking about. And this person is concerned about how will this technology and this access to finance affect the people's privacy, and how can we make sure that private security or private, let's say, privacy is insured.
Sure. There's a lot lately about privacy because of all the leaks that have been around. I am not going to get into that topic. But when we talk about these digital financial services platforms, all the data of the people is secure, can be encrypted, and everything is in the cloud. So there, of course, there can be place for breaches because every technology can fail, every technology can be hacked, but this technology is currently being used worldwide. Actually, this is what my company is providing, and we are working in the Caribbean, in Africa, in Southeast Asia, and we've been doing this for the last 10 years. And not only to talk about my company, but you have Amazon, you have Google, you have Microsoft. Just think of the biggest technological companies out there, and they are all cloud native. They are all platforms. And yes, one can say that a couple of these leaks came from maybe companies associated with these platforms. But I think that comes through another, I think that is a different point of view. If you have a robust and a very good architecture sure your privacy is secure.
And how can people learn more about this topic? Do you have any suggestions on things that people could, or websites that they could go to learn more about the financial inclusion?
Sure. So the World Bank, the World Economic Forum, actually the World Economic Forum earlier this year launched a research about financial inclusion that is very, very interesting. If you, I can share that link using the hashtag ThinkDiff so people can read it. And yeah, the World Bank and the World Economic Forum are the global institutions that have talked more about financial inclusion. Then, of course, you have the Gates Foundation that have been working in financial inclusion for many years now. You have MIFOS, MIFOS.org, that is an NGO that has been working with financial inclusion for the last 10 years. And then, of course, you have Kuelap. You can go to Kuelap, that's with a K, KUELAP.io, and you can find more information there too. And of course, I am always open to talk about these topics. I am very passionate about this, so you can follow me on Twitter or ask me anything. I'll be happy to engage in a discussion around this.
So, Luis, I think it would be great if you could leave these links in the comment space as well on our session page. I think the audience will also be able to find it there quite easily. So, yeah, you can do this later, but I think it would be great to keep the conversation going and discuss some of the topics that you covered. I think they were really interesting, and I hope that the audience online has found this session as interesting as I did. And thank you, Luisa, for taking the time out to tell us about how we can achieve financial inclusion, and to everyone that has been watching this session. And if you still have thoughts or questions that you want to ask Luisa, or if you are watching the recording of this session, please use the comment space on our website, or as Luisa has said, she's very active on Twitter, so you can maybe also talk to her there. And as I was saying in the beginning of this session, it's the last day of the Disruptive Innovation Festival 2018, but it's still early in the morning and we have plenty of sessions coming up today. So right after this session at 11 o'clock, so in half an hour, I believe, we will get a chance to meet the people who have made our documentary System Reset in our lovely studio. And at 12 o'clock, we will be exploring a circular revolution in Estonia. Estonia ranks third in Europe regarding the highest number of startups per capita. And this has given rise to numerous accelerators and development programs aimed to scale up and empower the startup ecosystem. But what is the problem? None of these programs involve principles of circular economy, circular business models. So this session is called Circular Revolution in Estonia, starting with startups. And they will discuss the potential transformation of those programs with 3 experts from different sectors. So I wouldn't miss that session. And please don't forget to watch all those sessions, films, and podcasts that you have missed during these past 3 weeks. Thanks again to Luisa, and remember to catch up on everything that we have going on at thinkdiff.co.